Cantor Equity Partners, Inc. is a blank check company, also known as a Special Purpose Acquisition Company (SPAC). Essentially, it's a shell company formed with the sole purpose of raising capital through an IPO to eventually merge with or acquire a private company, thereby taking that company public without going through the traditional IPO process. Until recently, Cantor Equity Partners had no operations, no revenues, and existed only as a pool of capital about $100 million held in trust waiting to find the right business to merge with. Their stated focus was broad, targeting sectors like financial services, healthcare, real estate services, technology, and software. The story took a dramatic turn when Cantor Equity Partners announced a merger with 21 Capital, a Bitcoin-native investment vehicle backed by major players in the crypto space such as Tether, Bitfinex, and SoftBank. This merger transforms Cantor Equity Partners from a dormant SPAC into a powerhouse holding one of the largest public Bitcoin treasuries in the world, approximately 42,000 BTC. The new combined entity, expected to trade under the ticker 21, will be led by Jack Mallers, CEO of Strike, a well-known Bitcoin payments company. The goal is clear: to provide public investors with direct, leveraged exposure to institutional Bitcoin adoption and the broader crypto ecosystem. The market's reaction has been swift and enthusiastic. Shares of Cantor Equity Partners surged over 55% in a single day following the announcement and have continued to climb in pre-market trading, reaching around $19 per share, up from roughly $10 just days before. Despite this rally, the company's market capitalization still appears undervalued relative to the value of its Bitcoin holdings, which has only fueled more speculation and interest. There are important caveats. Post-merger, the public shareholders will be heavily diluted, owning just about 0.7% of the combined company. Financially, Cantor Equity Partners has only generated income from interest on its trust account, reporting a modest net income of $1.54 million in 2024, with no operating business until the merger is completed. If the merger fails for any reason, the SPAC will liquidate and return funds to shareholders. But if it succeeds, investors are essentially buying into a newly minted crypto investment vehicle that carries all the volatility and regulatory uncertainties of the Bitcoin market. So, is Cantor Equity Partners soon to be 21 a buy? It depends on your risk tolerance and outlook on Bitcoin. If you are bullish on Bitcoin's long-term prospects and comfortable with the extreme dilution, volatility, and risks associated with the newly merged entity heavily concentrated in crypto assets, this could be a unique way to gain leveraged exposure to institutional Bitcoin adoption. The backing of major players like SoftBank and Tether adds credibility, but also means that retail investors have limited control and influence.